First off, is silver starting another sell-off? Well, you're going to have to look at a chart for that. And the answer is, while it's weaker than gold, it will probably not start another sell-off and is more likely to be basing. So gold's strength is lending itself to silver. And if you remember, silver's rally last week was the first time in a while that it rallied and outperformed gold. Now, both markets gave back a lot of their profits, their gains, but silver, for old time's sake, it started to outperform again.
At the onset of the week, silver experienced an uplift, currently trading at approximately $23.20. This upward momentum is predominantly fueled by diminishing U.S. yields and dovish expectations surrounding the Federal Reserve (Fed), guiding the metal on an ascending trajectory. Simultaneously, gold maintains its position near a 5-day high, surpassing $2,050 in Asian trading on Monday. A cautiously optimistic market sentiment supports this ascent. Heightened bets on a March rate cut by the U.S. Federal Reserve (Fed), and subdued trading conditions resulting from a U.S. holiday. Vince Lanci notes the relative weakness of silver compared to gold, but expresses skepticism about the initiation of a new sell-off. Notably, he underscores the interconnectedness of gold and silver, emphasizing that gold's strength contributes to silver's resilience. Despite a recent rally where silver outperformed gold, both markets eventually experienced pullbacks. The broader appeal for non-yielding assets remains positive as investors increasingly anticipate a Federal Reserve Fed reduction in interest rates starting in March. This sentiment is reinforced by releasing a softer-than-projected United States Producer Price Index (PPI) for December. According to economists at Goldman Sachs, the Federal Reserve is likely to commence lowering its benchmark interest rate in March, with 5 cuts anticipated in 2024. The investment bank envisions a soft landing for the U.S. economy, characterized by modestly slowing economic growth and a continued decline in inflation throughout the year. Goldman anticipates a gradual easing of rates, leading to a steady reduction in consumer and business borrowing costs. Vince acknowledges that if such easing occurs, it could catalyze a significant stock surge, followed by silver and gold. In this scenario, Vince envisions silver catching up to gold's performance over the preceding months. We will present clips from Vince Lanci's interview with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Gold's strength is lending itself to silver. And if you remember, silver's rally last week was the first time in a while that it rallied and outperformed gold. Now, both markets gave back a lot of their profits, their gains, but silver, for old time's sake, it started to outperform again. And I like that. That's what I saw. What Michael Oliver here sees is different and confirming that. So I wouldn't bring it up unless I saw confirmation from something different. All right, Fed easing. The world thinks the Fed's easing in March. I do not think that's something you should rely on. However, if it happens, you're going to have a rocket. You're going to have a flare lit under stocks and silver and gold, in that order. Stocks will go up first, silver will go up second, gold will go up third, and then silver will keep going, catching up to gold over its last couple months' performance. All right. A little more specific. So Fed easing, if the market is discounting Fed easing, and we see that's happening, the market is discounting Fed easing. I personally think the market is over discounting it, but I'm not married to that. What the market may be correctly discounting, and I just got information on this tonight, is that other things are happening that will happen before easing. Now, let me just put that in English. The Fed has to do some things in March. It has to, one, it's going to do on this BTFP program, which is basically a safety net for banks that are struggling. And if they wish to extend it, end it, or do some sort of a hybridization of that, that's their decision to make. Now, if they extend it, that's kicking the can down the road. You know what that means. If they end it, that's an almost immediate deflationary crisis. The banks, some of these banks will go under, and you'll lose confidence, and you'll have a repeat behaviorally of what happened with SVB. Remember that we may not remember, but I'll just say it. The BTFP was one of the things that quelled the fears of SVB. All right. A second thing they can do is they can ease, but they're not going to do that right away. The second thing, what they're going to do is they're going to do things that let the market see they're going to do more things if they need to. So the first thing will be terminating or tapering QT. This, and I said this before. The second thing will be announcing something that the market likes about the BTFP. The third thing will be easing, and the fourth thing will be easing, and the fifth thing will be easing. But until we get to that on-ramp of easing, these things are more important. The BTFP needs to be addressed, and I put RRP there. The RRP is the piggy bank that our banks have been stashing their money and getting 5% while you're getting 0 or 3 3/4%. They've been stashing their money there, and when called upon, they're taking money out to buy all these extra treasuries being bought. So when that piggy bank runs out, there's going to be a liquidity crunch. And so the Fed's going to have to do something about that to stop the liquidity crunch.
Silver recently experienced a rebound from the Head and Shoulders pattern's broken neckline, testing the robust support at $23. While the price rises, conflicting factors suggest a cautious stance. Before determining the next trend, it's advisable to wait for a clearer signal, such as breaking the $23.70 resistance or breaching the $23 support. Vince suggests the possibility of a triple top formation in silver, although it may not be an exact match. It is crucial to note that a breach of the mentioned support at $23 could result in a bearish wave, targeting the $22.25 areas as the next significant station. On the other hand, breaking the resistance at $23.70 would be a positive factor, propelling the price to recover and establish a bullish wave with its initial target set at $24.60. Vince observes a shift in the market mindset, indicating that silver is potentially entering a bottoming phase. He looks to Michael Oliver's analysis, emphasizing the importance of weekly closes. Michael notes silver's deviation from expected patterns despite a breakout in a parallel channel in 2023. Vince points out a potential triple top if silver closes monthly near or above $26, with Michael suggesting $25.50 could lessen the $26 level's significance. Let's get back to the interview.
Do we have a triple top in silver? Literally, no, but I'm going to tell you why I'm looking at it as a triple top. This is a monthly chart. 1, 2, 3. It's not an exact triple top, but it's what I like to see. I need to see 3 long wicks. I need to see them stopping out at basically the same price, same place. Then you say, well, what about all this over here? Yeah, that was a different market. That was the run to $30. That was the panic, right? And this was the retest of the panic. This is where the banks were told, never let it go above here again until we're out of the woods. And the market retested it. The bank said sold, and then whoosh, the market just rolled out. Now the market is in a different mindset. Bottoming, channel, triple top. I think the next time up there, it's going to go through there just like gold did last year. The basing action will occur if Friday's closing price is 23.76 or higher. Now, this is an oscillator that he has, and he puts a 0 there. Down here is negative, up here is positive, and price is in there. And I'm going to go off of his chart and show you what he's talking about. The market made a low. Let's go to the daily. I think he's on the daily now, right? See this here? This was a significant low. It took it out, right? This was a significant low here, and it took it out, and it didn't hold it. Now, normally I would say, looking at this, I personally would say, I want it to close green. And boom, the next day it closed nicely green. So I like this as a low. Now, you have to look at things like MACD and RSI, and I haven't looked at those yet, and I will to see if I agree with him. But his oscillator is probably similar, although definitely not exactly the same, based on that. And his oscillator says, well, actually what he said using his oscillator was, he has two different things going on there. I'm just close above 2376 in March says we're definitely done. And you can see what he's talking about here. He's talking about this candle being negated, right? And a close above 2321, which puts us right around here, makes him think that we're probably going to be negated. So 2321 makes you neutral friendly. 2376 makes you bullish, right? 2450, that's another number he has in there, makes you really bullish. And 2550 makes you, I don't know, makes you what's ultra bullish, right? Because this should not last if we get to 2550 on a monthly close. Middle of the month doesn't matter. Monthly close. Okay, I am worried if this QT news does not happen. He is worried. He doesn't say he's worried, but he says if we close under 2321, I think it's a weekly basis, then he would get slightly concerned. And if you look at that again using my chart, a close under 2321 on a weekly basis puts us strongly back in this channel, right? This downwardly sloping daily channel. Let's see what that looks like on a weekly. You can see what's going on there. You have a long weekly wick. You close below 2321, and it probably just negates his momentum. And I'm speaking from on my own here. I haven't spoken with him yet, but I'm qualified to read at least, I think. So this trend here might be negated if we get above here. I like that, 2321. It's a March contract, but it's close enough to spot right now for me to be comfortable with that.
Silver's recent move beyond $23.55 suggests potential bullish momentum. It needs to surpass the main resistance at $24.50 to confirm a stronger upward trend. How do you foresee upcoming market conditions impacting the future movement of silver prices? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.